Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, February 14th. Happy Valentine's Day to those of you around the world celebrating. We also had CPI numbers this morning, which was very much anticipated. And to bring up CPI numbers first. The easiest way to say it is that CPI year over year came in at 6.4% when it was expected to come in at 6.2%. Now, month over month numbers were relatively even for regular CPI and core CPI, but obviously year over year seeing a slight increase. You want to see a continued decrease for the market to continue to price in, I think, general bullish price action, because if inflation is either flatlining or slightly increasing, of course, that could be one hump before another fall, but the market reacts on current data that it has, and CPI, not moving in the direction that the Fed and general market participants want it to is certainly cause for concern, and is likely why I think we'll see a little bit more bearish price action. But let's go ahead and discuss. So DXY currently, when we spoke yesterday, was obviously trickling down. We had a giant. This actually was a Darth Maul candle before it closed, quite looking strong, but very strong wick down, similar to what we saw last Thursday, more or less tagging the previous support level. Now we're back up, trading in this range that we were hanging out in. So the one key indicator right now, and well, before I dive into that, you can see where I drew the lines for the Trade the Chain community. This is where we were, very early this morning. And so, saw this giant wick forming, typical swing failure pattern type formation, and said that, if we can get above the estimated 200 moving average for the 4-hour chart, then we have, the precipice to then move higher, break above 103.5, and potentially move to the top of the range. Now we're above the previous daily close. So 2 initial targets we are above. Of course, this 4-hour candle still has 3 hours left to close, but preliminarily, DXY does seem to be looking quite strong. So what you'd want if you are bearish risk assets, you would want DXY to break above 103.5 and continue to chug towards 104 or higher. And in that scenario, you would likely see risk take a bit of a haircut, throughout that entire process. So if we, end up breaking below the previous daily close and then potentially back underneath the estimated 200 moving average, then next level of support is 102.5. And in that scenario, risk is probably moving higher. So a lot seems to be up to the dollar, as it has continuously been. And a precarious position does look a little bullish. I'm not ready to fade it yet. The best way to play this would be to wait until this 4-hour closes. If it closes above 103.5, probably going to see some bearishness. If we continue to hover here, we'll continue to extend that decision most likely. So looking at equities, a very critical position that we're at right now is that 4,100 level. Called that out several times over the past couple of weeks, and hovering right above it with a wick below it. So, possible swing failure pattern there, but it's still hovering around this area. We have not seen a confirmation for rejection, but stock RSI does seem to be potentially resetting, but take that with a grain of salt, because look what happened last time we were at 4,100 when stock RSI was potentially resetting. So moral of the story is this morning, CPI, a lot of Darth Maul candles, big swing failure pattern above 4160 sent us back down to the lower end of the range. Now the question is, do we recover from this part of the range and move higher towards the previous daily close, or do we trickle and then head lower here? So of course, that is likely dependent on the way that the dollar moves. So if the dollar moves down, equities are probably trying to reattack 4140. If the dollar moves up, equities are slowly breaking beneath 4100, and eventually there will likely be a crack, kind of like what we saw with this candle last Thursday, and we'll head lower, likely to 4050, potentially 4040. So that is the current outlook for equities. I'm currently not bullish with the dollar's positioning. Of course, I was a bit wrong in terms of my, general bearishness yesterday. We, of course, did get a bit of a squeeze going into the end of day and obviously this morning, but we're right back around previous prices. And, of course, decision zone is to be made. So I was slightly wrong yesterday, but the general gist of directionality from CPI was correct. And if you shorted, CPI, then, you had a good trade, at least for that initial moment prior to the squeeze. So looking at Bitcoin, kind of looks similar to equities in the sense that, jumped higher, moved lower, and now we're slightly moving lower. The big demand zone that we have up here is, still that 22.3 to 22.4 level. Really need to crack this, get above this for any chance of bullishness. When I drew these for the Trade the Chain community, of course, it was quite early, still around the previous daily close. So we did make it up to this level. Now the question is, do we flip this level or do we get rejected off of this level back down to the low end of the range? And I think we would likely get rejected back down to the low end of the range. Maybe we tag the estimated 200 moving average. Maybe we do a little double top here. But I would say that this likely rolls back over down towards the lower end of the range in some way, shape, or form. And of course, if we zoom out, then we can see that 20.5 is the next level if 21.4K fails, which is the previous range. So we'd really want to hold 20.5 for continued bullishness with this current momentum. Anything below that, you have a massive fair value gap down here, and things can get really hairy if we start to collect around 19K. So definitely keep a lookout for that. But right now, the demand zone is really the resistance area. You got to get above the demand zone, confirm above it to move higher. Anything below it, I think, is a decent short opportunity, especially with the wicking action that we've seen. So looking at Ethereum, very similar to Bitcoin. Interestingly enough, it's above that previous support level. So that's a positive for Ethereum, but it's beneath the estimated 200 moving average. Of course, tweezer top right above it. So this does look to be the resistance area is the estimated 200 moving average. So potentially we zoom back up here, maybe another wick, and then start to move back lower towards previous daily close or the lows. And of course, if you can confirm above the previous, if you can confirm above the estimated 200 moving average, then you can move higher. So confirm above, higher, get rejected, lower, and potentially lower. So that's pretty much your outlook for Ethereum. Now, just moving back to the dollar, does seem to be moving a little bit higher. Again, we still have 3 hours left in this, so worth watching, but it does seem to be proving a little strong. Also worth mentioning is this bullish divergence. Price is moving higher, RSI is moving lower. So that's also something to consider on DXY. Then if we look at spots and perps, we're not seeing any real divergence here between perp CBD and spot CBD. No real inference to be able to be made from this. Typically does kind of look like a bull flag, but we are making continuous lower highs. And you're not seeing anything outplay each other, meaning there's no spot isn't really leading perps to indicate, some strength. Perps aren't leading spot to indicate a potential scam. So, we're pretty much even in line, and, we'll continue to be technically driven, which I think will, of course, rely on equities. If equities, break below 4,100, then crypto is definitely sliding back to recent lows. And of course, if this demand zone gets rejected again, or with this estimated 200 moving average, then we'll probably end up heading lower as well. So not too positive. I know I was a bit bearish yesterday and we did have a squeeze higher. So apologies about that if you were shorting near the lows, but my outlook is still that we will eventually break these lows in the near future, likely due to CPI or likely due to inflation data not being exactly where we want it to be, coupled with the fact that unemployment is extremely strong, which may continue to affect the inflation problem. So that's the current outlook. I'm currently positioned short. I closed out my trades. I didn't obviously collect all of the profits that I wanted to. I probably should have taken a little bit more off the table near the lows yesterday, but still closed in profit as we began to rise up. And now I'm looking to reshort lower, provided DXY moves higher and equities, of course, break below 4,100. So good luck. Happy trading. And see everybody tomorrow, same time, same place. And again, if you're not in the Trade the Chain community, that's where all the juicy alpha comes in, morning, day, and night. So get signed up at www.tradethechain.com. Else, I will see you tomorrow.